been Chief Executive Officer of National Bank for about a year now. What's been your biggest surprise so far 1 year into the job?
No big surprises. I've been with the bank for over 25 years and with part of the management team for quite some time as well. So we're in a very good spot in terms of our strategy, solid balance sheet, very strong performance track record over the years, a very disciplined approach towards capital deployment. So, given what's going on in the market and the uncertainties, I think what's the most important thing right now for us is to remain very focused on strategy. And that's what we're going to keep doing. We have also a very good and solid revenue mix. This is something that as I think performed really well throughout cycles. We're really big fans of the universal banking model. I think that balance between retail, commercial, wealth, and wholesale has performed really well. And so, we know what got us here today, and so we're not about to change that.
So no major changes coming,
No
but what are some of the biggest opportunities for the bank moving forward?
Oh, that's a good question. I mean, going back to what's happening right now, I think the most important thing that we need to do, and that's what we're going to do, is to keep focusing on our strategy and our disciplined approach towards capital deployment. When you look at our PNC business, our commercial has great momentum and has performed really well over 2022, and we're still seeing some good momentum in the coming months. We are going to see a slowdown in personal banking. I think the obviously mortgage lending is going to be affected with rates going up. Our wealth business, we have a differentiated approach in terms of strategy, much more focused on distribution versus asset management. That has also performed really well. Our focus on client acquisition and product sales has helped us mitigate falling markets over the past quarters, and we think that we have the right approach in our wealth business. Financial markets, we are not about to change the way we do business. Very focused on Canadian clients, niche sectors outside of Canada. Very focused on areas that we know we can compete and do well. So that is not about to change for us. With the current uncertainty in financial markets, we could see more opportunities on credit G. So on that, we did signal at the beginning of the year that we wanted to slow down a little bit our deployment of capital in credit G. But as we are seeing more distortion in the market, we could see opportunities there. And ABA, our Cambodia bank, is going to continue to provide us with really good earnings growth.
All right. You took over as CEO at a pretty interesting time for the bank, and especially in the broader economy. We'll get to some of the bad stuff later, but what are you seeing in the economy that heartens you right now?
Well, maybe I'll start with the concerns. I think the biggest problem is the confusion right now with various policies. You have monetary policy that are obviously very restrictive with interest rates going up, fighting inflation, domestic demand pressures and wage pressures, as well as supply side inflation. You also have and you will see more impact on liquidity with QT. And on the other hand, you have government's willingness to continue to spend. So those things are I would say somewhat confusing, and it's hard to figure out where all of this is going to pan out. So I think it's not a surprise. We all are expecting a slowdown. We are expecting that slowdown to continue throughout 2023. Canada could face a recession as well in 2023. Now, I guess the good thing is that on a relative basis, Canada is well positioned. So we have very strong demographics, very low unemployment, as you know it. being a resource-based country is also, I think, a good position for us at this point in time. So I think overall, I think we are in a relatively good position versus the rest of the world. We are going to have, we are expecting a slowdown, and we are going to go through that throughout 2023. But I do expect that on a relative basis, Canada's in a really good spot.
All right. So since the pandemic started, one of the big tailwinds for the banks has been a really abnormally low level of impaired loans. When do you expect credit to normalize, and how do you expect that process to unfold?
That's a very good question, and it's tough to say because the you still have some, a labor market that's still very strong. You have saving rates that are high. Now those are going to decline with higher rates and inflation, but the underlying conditions are still very strong. So it's you are going to see normalization. I know my best guess at this point would be towards the end of 2023. I think the best thing to do is to be prepared for that. So in terms of allowance for credit losses and reserves, we have been very conservative throughout the pandemic, and we have remained conservative coming out of the pandemic and into an economic slowdown. So I think we are really well prepared for a normalization in terms of PCLs. But again, still too early at this point to say. So my best estimate is towards the end of 2023 that you would see normalization.
Okay. Another tailwind that you've had, a more recent tailwind, has been these interest rate increases. How do you expect the remainder of this rate hiking cycle to play out, and what are you doing at National Bank to maximize the benefit of that?
So you're right, a tailwind, but at the same time, they will affect growth, and we have to keep that in mind. Now the labor market is still very tight, although interest rates are going to start affecting spending. They will affect also business confidence, and we are starting to see, it's anecdotal, but we are starting to see business confidence erode. So what I think is, well, look, we've seen 300 basis point in 6 months in Canada. So I think what would be a wise thing to do at this point is probably a pause and see how this pans out and see what the real impacts will be, because there is a lag in how it is affecting consumer at this point.
All right. There's also been quite a bit of turbulence in the financial markets since the pandemic started, carrying on into this year, especially with all these rate changes. I'm curious, what do you see as the outlook for National Bank's financial markets business right now?
I think valuations are going to remain under pressure throughout the year. Equity and debt issuance could be in for a rough ride. Now M&A will have some challenges, but we could also see some opportunities given market conditions. I think the outlook for trading could be good. I think we'll continue to see market volatility. We should see some good volumes as well. Now the interest rates going up could have a positive impact on corporate derivatives, rate products, and with central bank interventions and QT, you could see also good results in our securities finance business. So I mean, overall positive, but let's be honest, the markets are the markets, and so we do have I think some headwinds in terms of headwinds in terms of valuations and liquidity. But overall, I mean, positive in terms of how we are positioned, our franchise, and our strategy.
All right. Now, especially for this credit, I was wondering if you could take a little bit deeper dive into what your outlook for the debt capital markets are for the next period here.
I think the real test for 2023 will be higher rates and QT. I think these two aspects haven't been really tested. So I think we have to go through that, and investor appetite, through a changing environment. So I think overall levels are slightly down in terms of issuance in 2022 versus a record year in 2021. We think that the levels should be approximately the same in 2023 versus 2022. Now leverage is going to be challenged, so we'll see how corporates can go through this changing environment. In terms of government issuance, we think it's going to be relatively light versus the past couple of years. And we're going to see more SSA issuance in Canadian dollars, I think, over 2023.
All right. Now, for National Bank's own financing strategy, you had a fairly active year in the bond market so far in 2022. What can we expect for the rest of the year and into next year in terms of your financing strategy regarding what kind of issuances we can expect?
So we're not going to change our strategy. We do about one or two benchmark per quarter. We're in the U.S. market at least once a year. It's important for us to be present in the market and support our clients. I think given the change in the rate environment, we could see more reverse inquiries. We could see more structured products structured. We could see some club deals. But, the fact that the rates are much higher, we are expecting more calls from investors on structures.
All right. And in April, National Bank released its targets for financed emissions. Can you talk a little bit about what the bank is doing there and anything else that's working on the ESG front?
Yes, absolutely. So we did announce a reduction of 31% for scope 1, 2, and 3 of financed emissions for our interim targets for 2030. We are working on our other carbon-intensive sectors at this point in time. I think the strategy on climate is pretty straightforward and simple. It's to do the right thing. And to do the right thing means to support an intelligent transition. So we have a team, a sustainable finance team that is supporting our clients on their targets and reducing their carbon footprint. We have committed over $8 billion in capital in renewable projects over the past couple of years. And we're going to keep supporting, oil and gas, the oil and gas industry that is working towards the transition. So I think it's important to have in mind that we are in a transition and we can't stop overnight, the support that we have towards the energy sector. Okay. In terms of climate, that's sort of the current approach. In terms of our impact on social, we have internal targets for our impact in terms of inclusion and diversity, very involved in the communities as well. We have been supporting, the First Nations Finance Authority since 2012 and very active in affordable housing in Canada.
All right. And last question. National Bank has a significant mortgage business. I'm just curious, what's your outlook for the Canadian real estate market for the next year?
So we expect, at this point in time, we see from our TerraNet index, the market down about 5%, and we expect peak to trough, I think a reduction of about 15% throughout 2023. So in terms of real estate, if you go back to levels of pre-pandemic, we're still above those levels. So we don't expect the market to go down much further than that in Canada.